I think there are 5, 6 lessons that perhaps we can think about from other markets. I think one obvious point, which Uche has already covered, is the importance of transactions being bankable. Private investment and other investors, will actually participate and support those investments. I think secondly is the importance to lever the government, because if you're going to invest and increase infrastructure investment by 15-20% a year, the government does not have the financial wherewithal to support all of that themselves. So you find OECD countries who invest nothing in their infrastructure investment because they've created an enabling environment that allows that infrastructure to be built. And at the other bookend, we have the good work that NSIA are doing with organizations like PIDF, but which today are principally 100% financed by the government. If we'd taken that 100% investment and gone to a market like Saudi or Abu Dhabi, they would have used that as half of the equity investment, brought in debt finance, delivered $4.5 billion worth of infrastructure. So you need to find a way of blending this public and this private sources of capital. 2, 3 final points, and then I'll stop, Samaila. I think it's important to corporatize. I think we all understand how corporates work. We understand the governance of those. Corporates can be listed. You can find other sources of capital in the future. I find it interesting going to markets like Beijing, finding that the Beijing government has 20 corporates. Half of those are listed in Hong Kong or China. They've been able to attract significant external capital into the plans they have in their own city and province. And I think that corporatization, helps bridge the focus of governments and development banks on greenfield infrastructure projects with the desire from institutional investors to invest in existing, operating, yielding assets. And I think to make these investments, one needs to find the right institution to do it. And I recognize that banks are incredibly important within the economy. But thanks to Basel III, thanks to the way that banks account for themselves, they are not the primary source of long-term capital for infrastructure projects. And that's very clear from the experience in the OECD. And I think it's very important for us to find ways of bridging institutional capital, into infrastructure projects here. Final thing I would say is around currency. And currency is really what drove the work that Balaji and myself and Chapel Hill did around the infrastructure debt fund in Nigeria. Infrastructure assets are paid for in Naira, whether it's mobile telecoms, toll roads, power, and so forth. And so it's incredibly important that we define those in Naira. Thank you very much.